Students, I hope you all are doing well. Sorry, we couldn't connect last session because of some personal reasons at my end. So let me connect you back to the topic that we were discussing. If you remember, I had mentioned to you all students that this topic of foreign trade policy is a very, very crucial topic. For the exams also, it has a defined weightage. But more than that, if somebody aspires to do a non-traditional practice other than what normally professionals are doing, then customs, I've been always saying, is a very great area of practice. And within customs, there is a specific area that is FTP, that is foreign trade policy. Now, in the previous session, we discussed the various aspects of foreign trade policy as to what is the legal background of this foreign trade policy, from where this foreign trade policy concept has come into existence. As you can see, it is under the Ministry of Commerce and Industry, and it is regulated by the Foreign Trade Development and Regulations Act, which is the parent law for the foreign trade policy. Then we studied some background about foreign trade policy, what are its features, fine. Now, students, let us understand.
आपने सर पीपीटी फॉर्म में कर दिया होगा उसे। आई थिंक आपने स्क्रीन शेयर की जगह पीपीटी फॉर्म में कर दिया होगा।
ये ठीक है अभी?
यस सर।
Okay. So I was saying कि एडमिनिस्ट्रेटिवली फॉरेन ट्रेड पॉलिसी कम्स अंडर डीजीएफटी, जैसे हमारा इनडायरेक्ट टैक्स कम्स अंडर सीबीआईसी, डायरेक्ट टैक्स कम्स अंडर सीबीडीटी। तो वैसे यहाँ का जो एडमिनिस्ट्रेटिव डिपार्टमेंट है, दैट इज द डीजीएफटी, which is obviously the head office being at Delhi. So please understand, dear students, that whenever anything related to foreign trade policy has to be clarified, any relief has to be sought, like how here in case of our indirect tax, we get the circulars being issued by the CBIC. Similarly, time and again, various types of procedural aspects are clarified by DGFT. Various types of exemptions from various policy and procedure aspects are given by the DGFT. So DGFT is the regulator, I will say, for our foreign trade policy related pointers. Now, what are the other authorities which are equally involved in the administration? As you can see on the screen, it is the CBIC, because majorly the foreign trade policy has impact on our indirect taxes. So CBIC comes into picture. RBI comes into picture because of involvement of foreign currency, various state GST departments. So these are the various persons who are also involved in the FTP administration. Then we went to some detailings of FTP. I also took you to the link where we actually opened the DGFT website from where we saw the foreign trade policy document. So there, if you remember, we saw that it is divided in 11 chapters. And along with the foreign trade policy, you have another very important book, which is called as Handbook of Procedure. So it is same like how you have the CGST, SGST Act, and you have the CGST, SGST rules. So Act gives the basic law and the rules clarifies the procedure.
शुभांकरी शुभांकर से शुभांकरी
Becoming AEO, the benefit of becoming AEO is that you will get some preferential treatment in relation to the custom procedures. So preferential treatment would mean faster processing of your import-export cargo, then reduced level of examination, deferred payment of duty, So sorry, students. So I was saying the statuses that you are granted under FTP, one is AEO for independent business entities, one is TEE for respective town places, where then the government will work on the development of infrastructure so that that town becomes more competitive from the perspective of making exports. Now, this is again very important status. It is called as the status holder, whereby you are given one of these statuses depending upon what is your export performance. These statuses are 1-star export house status, 2-star, 3-star, 4-star, 5-star. Now, depending upon the status, the level of benefits, the level of leverage, the level of extra facilities that you get will change. So like how we go to flights, we have economy class, we have business class, we have executive class. In the same fashion, this status holder are given different levels or class of benefits depending upon their export performances, which are measured using some parameters. Now, these are those pointers that determine how the export performance of the status holders would be computed to determine the category of the status holder, whether they are 1-star house, 2-star house, 3-star house, etc. These are the privileges that the status holder will get once you get these statuses 1, 2, 3, 4-star export house status. And obviously, the more higher is your rating, the advanced or the more preferential treatment you get under customs. Then we went to the import-export related provisions under FTP. So under FTP, since import-export has direct impact on our relations with the other countries, today trade has become a very important tool to achieve some other type of benefits from various countries. So wherever we want some arm twisting to be done, we want some pressure to be created, we normally use trade as a tool to do that. Hence, trade has a direct bearing on our foreign trade policies, and that is why FTP has specified some very important import-export related provisions which are part of the FTP. Now, in this particular concept of state trading enterprise is important, whereby in some cases, direct export by a particular business entity is not allowed. The provisions of FTP are such that you need to compulsorily route your exports through these state trading enterprises, which are generally government nominated bodies, which act as a type of a, you can say, authority through which you can route your exports for some specified purposes. Then you have the IEC code, like how in case of GST, you have the GSTIN. Similarly, in case of customs, your identification number for all custom related activities, whether it is following custom procedures or getting custom benefit, is the IEC importer exporter code. And then there are some penal actions, etc. So these were the various points that we discussed in the previous lecture relating to our topic of FTP. Now, the first part, the unit 1, which we discussed in the previous lecture, was the overall FTP with the perspective of understanding what FTP or the foreign trade policy covers. Now, in this session, which covers unit 2, we are going to deal with some very interesting and very important foreign trade related schemes. Now, again, as I was mentioning, this particular subject is a very important and interesting area of practice. So whoever wants to be not in traditional practice may select FTP as their area of practice. And why this is very lucrative area of practice or profession, because in this you get the businesses varied types of benefits, which may be either concession in duty, exemption in duty, or any type of scripts that you can get them, which they can encash in future, or they can against that script do some purchasing without paying local taxes or without paying import duty. So these are the different benefits which are provided by the FTP in the form of various export promotion schemes. So today we are going to discuss those export promotion schemes which will be part of your exam syllabus also. So let us understand what are the broad categories of export promotion schemes. So category A is duty exemption schemes, in which broadly we are going to study two. The most important one is the Advance Authorization Scheme, and the other one is the Duty-Free Import Authorization Scheme. Both are similar because in both cases, you get the benefit to import the goods without paying the applicable duties. However, there are slight differences between the two, hence you have two different schemes. Second type of benefit is the Duty Remission Scheme. In this particular case, whatever duties you have already paid on your purchase side, once these goods are finally exported, you are given back the duty like a refund, you can say so. So that is why this is called as duty drawback. So you are returned back the duty, hence it is called as drawback. Then comes another very interesting scheme, which is again similar to duty drawback. It is scheme for remission of duties and taxes, RoDTEP. Now, this scheme is again providing you benefit for those taxes which are not covered in duty drawback. So duty drawback covers some specific taxes only. Originally, it was covering the customs portion, the basic custom duty portion, and the earlier excise portion. Now it is covering the GST portion, but not in all cases. Now the duty drawback rates have been lowered down, revised, because GST, you are already getting refund under the GST law itself. So in order that there is no duplication, the drawback rates in majority cases have been lowered to remove the GST impact. So basically, drawback only covers today majorly the customs duty and related other duties, but not the GST portion, because that refund you already get under the GST law itself. Now, there are other duties and taxes which you are not getting refunded by the duty drawback. So for them, you have the RoDTEP scheme, which gives you refund or drawback for those duties taxes which are not embedded in the duty drawback scheme. And then comes another similar scheme, which is called as RoSCTL, that is rebate of central and state taxes and levies. Now, this is specifically notified by Ministry of Textiles because it has a limited application only to particular sector. So these are the broad schemes that we are going to study today in detail. Besides this, there are two more concepts that we'll study directly from our module. Now, we start with our first important scheme, that is Advance Authorization. Now, students, let me explain you what you mean by Advance Authorization. Now, we all understand the meaning of the word authorization. Authorization means a type of a licensing or a permission. What is this permission? The permission is, now see, what was the drawback scheme? If you remember, I just explained drawback is you have already paid taxes on your input side. Now, if those inputs are finally exported, either as it is or after doing processing and converting it into some finished goods, once these finished goods are exported, then whatever taxes you had paid on the input side, which may be local domestic taxes or it may be the customs duty, that is given back to you after export. That is what is the drawback scheme. Now, if you already know that you are importing particular raw material exclusively for being used in manufacture of those goods which would be ultimately exported, it means your import is specifically for making export or for being used as a raw material in making export, then why not we take the benefit at the time of import itself? So why should I first pay the tax? Then I should block my funds for that much period till the time I manufacture and export these goods. Instead, let me take the benefit at the time of import itself in advance. So if you understand firstly the logic of the scheme or the ideology of the scheme is, once you are clear that you are going to use this material for your export, then at the time of importation itself, you can demand the concession in the import duty. That is what is called as Advance Authorization Scheme. Now, basically in exams, you are asked either the complete details, the features of the scheme which we are going to study, or you are asked one or two aspects of the scheme. But this is a very, very important scheme, even from the practical point of view, from the profession point of view, and hence also from the exam point of view. So the broad idea is you take this particular type of license, I will use the word because authorization means license, by making application. Once you get this license, you import without paying the customs duty, and then you have to ensure that you use this material in the export, and all the compliances, reporting, audit, etc. has to be done. Once you do this, you are complying with all the requirements of the scheme, which is the Advance Authorization Scheme. So this is the broad overview of the scheme. Now let us go to some technicalities of the scheme. Whatever pointers we are discussing over here is what you have to write in the exams when they ask you about what are the salient features of the scheme. So items which can be imported duty-free against this advance authorization license. So once you have taken this license, what you can import without paying the customs duty? One, inputs that will be physically incorporated in the product. In short, your raw materials. Then those consumables which will not get converted into final product. So first point is raw material, which you can see that, okay, this is there in my final product. Like I am going to export plastic toys. Now, if I'm importing plastic granules, tomorrow I can say that, see, this plastic granules are part of my export product because export product is made of plastic. Or if let us say I'm exporting garments and I had imported yarns, so I can always say, see, these are the yarns which you can see even in my final product in the form of fabric. But the second item is what we call as consumables. I'm sure you all will understand what are consumables. See, the name is given: fuel, oil, some type of chemical which act as a catalyst. These are those items which helps you in the production process, but they do not become the final product. Like when you are cooking food, you can see in your final product, which is the final food, that is, let us say today's dinner, you will see chapati, you will see all the type of dal, rice, and all the type of vegetables for which the raw material you can identify. Okay, chapati, the raw material, I can identify with the wheat flour. For the dal and all, I can identify with the raw dal and the raw rice. But the oil, the gas that you utilized for cooking this food cannot be seen in the output, but that is also ultimately consumed in making the final product. So that can also be imported duty-free. Now, who all are eligible for getting this authorization and hence importing without paying the duty? It can be issued either to the manufacturer or the merchant exporter who is tied to a manufacturer exporter. So either you are importing it and you are yourself going to use it in manufacturing, that is, you are the manufacturer exporter who is himself going to manufacture and export it, or you are a person who has purchased the final product from a manufacturer and you are going to export the final product, and the manufacturer had purchased or imported the material under advance authorization scheme. So here either the manufacturer himself is exporter or the manufacturer who is getting this particular license, who is the exporter who's getting this license, may do it on trading basis where he is called as a merchant exporter. Second, advance authorization for pharma products, means medicines, drugs, etc., manufactured through non-infringing process shall be issued to the manufacturer exporter only. So for certain materials, the eligible applicant cannot be merchant exporter. It has to be the manufacturer himself. Now, this is the eligible person who are eligible for this particular licensing or scheme. Now we come to what are the eligible supplies. That is, what are the items for which advance authorization can be done. Item is what are the transactions for which advance authorization can be done. So see, basic idea is I will give you this advance authorization license where you are going to finally export your final product. Now, how this export can be done? It can be done in various forms, and these various forms are eligible for advance authorization license. What are they? First is, I will use the word actual exports. What they are calling it as physical exports means my goods I have finally exported to a foreign country, or I have sold it to SEZ. Now we all know that in the income tax law, GST law, everywhere, selling by a DTA to SEZ is as good as considered as export only. So first category for which advance authorization can be taken is where my final product is going to be actually physically exported. Second, intermediate supply, like where I am directly not exporting, but I'm selling to you and you are going to export. Now, you may be the state trading enterprise where it is compulsory that I export only through you. So I'm not fitting in the first category because I myself am not making the export, but still, ultimately, my goods as it is are getting exported, but not by me, through some enterprise which maybe the government itself has nominated. So I can use it even for intermediate supply. And then third category is deemed exports. If you remember in the previous lecture, we discussed this concept. So what is deemed export? As the name suggests, it is not real export. Real export is first case. where you are directly exporting your goods to a foreign country or to a SEZ. However, what is deemed export is where you are selling your goods under this particular license to a person who is going to ultimately export the goods. So let us say we take a company, Company A Limited, which is the manufacturer of petroleum products. Now, Company A has this advance authorization license where it can import the goods without paying the import duty. Now, I am a domestic supplier of same type of raw material which this company requires. Now, I approach the company कि instead of you importing this, I can supply you the same thing, maybe at a better price or maybe with credit facility since we are in the same country. But the company says कि Vishal, there is a problem. If I have imported this from outside, I don't have to pay any duty at all because I'm having advance authorization. But if I purchase from you, then I have to first pay you duty. Then after export, I have to go and claim refund. So till that much extent, my working capital gets blocked to the extent of the duty which the company will be paying me in the form of local taxes, example GST. Now, this is where I was being disadvantaged because he will be preferring buying from a foreigner rather than a domestic person. This is where the concept of deemed export was brought into the FTP, which if you remember, we discussed in the previous session also deemed export concept. What is this deemed export concept? The deemed export concept is that the same company who is having this advance authorization will say, okay, Vishal, do one thing. I am giving you my advance authorization copy, which shows that the company has advance authorization license. I am going to supply to that company, even though it is a domestic supply, but under this advance authorization. So for the company, it will be similar to importing from outside because had it imported from outside, again, at the time of custom clearance, it would have given this advance authorization details in its bill of entry, and it would have got the benefit of clearing the goods from customs without paying the customs duty. Similar thing will happen over here. When it will give me its advance authorization details, I will be supplying the company the goods domestically. Now in GST, deemed export says you first charge the duty. But since as a supplier, I can myself go and claim refund of the duty. So even though I will charge the duty, but I will not collect it from that company. So for the company is indifferent between buying from me domestically or for importing from outside, because in either case, it will have to pay no tax at the start. Why? Because the company is having this advance authorization license. Now, in my hands, even though I have sold this domestically, but ultimately the company is going to use my goods in their manufacture production and going to ultimately export the final product. Hence, the law has considered my domestic supply to such a company under these licenses as a deemed export so that I stand in the same position as a foreign supplier for this domestic company. So these are all eligible supplies which would be eligible for your export authorization. Further, these items can be supplied not as a cargo but as stores. We all have studied this in customs part that it may happen that certain goods are supplied to the ship, that is the vessel or the aircraft, which the ship is going to consume while it is in the journey. So all types of food articles, the fuel articles, medicine, equipments, repair items, all these are stocked in the ship, and it is stocked to such an extent that whatever is the journey period, the quantity should suffice for that much journey period. Such items are called as ship stores. Now, I may not be selling my output directly. That is, I'm not fitting in point number one. Neither I'm selling it to some local person under some advance authorization license. So I'm not fitting in point number three. But I am giving my output to a ship which is going to consume it while it is in journey. That is, it is a foreign going vessel. Now, even such a supply by me to a ship or a vessel, that is a ship or an aircraft, sorry, which is a foreign going vessel, that is which is going to outside country, will be eligible supply for the purpose of advance authorization. So whenever I am taking advance authorization, I am the eligible applicant. I can make any of these supplies which would be satisfaction of the advance authorization requirement. Now, what will happen if I have taken advance authorization? The main purpose of advance authorization is when I'm buying the goods, I can buy these goods, that is import these goods duty free, that is without paying the duty. Now, what duties are covered under this advance authorization license, which I need not pay? The basic custom duty, the additional custom duty, the cess, anti-dumping, countervailing, safeguard, and the transition product specific safeguard if applicable. Now, if you remember, we have studied all these when we were studying the types of duty chapter, which was chapter 2 of our customs module, right? Now, again, there are some exceptions or some riders. It says that specified deemed exports are not exempt from payment of applicable anti-dumping, countervailing, safeguard duty, etc., etc. Fine. So for these items or for deemed exports, that also of specified items, you have to pay these duties first. Okay. But in general, all the custom related duties, you can say, are eligible for exemption if I am buying these goods under advance authorization license. Further, import under advance authorization for physical as well as deemed exports are exempt from from whole of the IGST and compensation cess. So as we all know, at the time of customs, besides custom duty, even the GST portion in the form of IGST and if applicable custom compensation cess, both are recovered. So that is also eligible to be exempted. In simple words, the importer, if it is having advance authorization license, will clear its goods without any type of customs duty. Similarly, deemed exports. So where I'm supplying locally under advance authorization, specified for this purpose are supply of capital goods against the EPCG. EPCG we are going to study at the end, and supply of goods to UN, that is United Nations or international organizations for their official use or supplied to project financed by them. So these are the cases which will be covered under deemed exports specified for this particular benefit. Okay. Further, now we have understood what is the benefit. We have understood who are eligible. Now we go to the procedural part of the scheme. So what is the heading? Basis of issuance of advance authorization license. So this license is issued for what? For inputs in relation to the resultant product. So obviously, as I said, you are importing something which you are going to use as a raw material or as a consumable in making a final product, which will be ultimately exported. Now, this will be decided on the basis of SION. If you remember, we had discussed this also in our previous lecture when we were discussing the concepts in FTP. What is SION? As you can see, the full form, Standard Input Output Norms. Now, understand this, students. I am importing something today, which I am claiming that this will be utilized by me in some export. And since it will be utilized by me in some export, I am demanding that give me this advance authorization so that I can import this without payment of custom duties. Fine. Government says it is okay. We are agree to do this. But how will I come to know that up to what extent of inputs or fuel or consumables I should allow duty free? That is decided on the basis of SION. So SION is the standard set for deciding for how much output, how much quantity of input or consumables is required. So it is like the input output ratio given, which is given industry wise, which is given product wise. And many times if you want, you can get a specific SION set for your particular product also. Now let us say you are claiming that in the next coming period, I am going to have export of, let us say, 1,000 tons of some product. Then they will apply this SION to find out for 1,000 tons how much quantity is required in the input, which obviously includes the normal loss. Let us say the ratio is 1:1.2. So for 1,000 tons, I require 1,200 tons of that particular raw material. So they will issue me the license of 1,200 tons. So I have to specify how much export I am targeting. And on the basis of that export quantity multiplied by the SION, they determine to what extent they can give the permission for the import. The second option is they can simply give it on the self-declaration basis where you yourself declare that, okay, I will require 1,500 tons of this raw material and I'm going to use it in my output. That I will explain later. That you can also say, and that may also be agreed for certain category of products. Third, applicant specific prior fixation of norm by the norms committee. So the third way of granting advance authorization is that your case will go to a norms committee, which will fix a particular norm for your industry as to how much, to what extent advance authorization should be given to you. And on this basis, advance authorization shall be given. And last could be on the basis of self-ratification, which is similar to self-declaration. So at different points of time, different things have come into existence. Now, even the module has explained what is self-ratification. So where there is no scion or there are no valid norms, so second and third is missing, an export product, or where scion has been notified but the exporter intends to use extra inputs in the manufacturing process, because I say that my products is distinguished, I'm providing a more superior product. Let us say even in cloth, I can say I'm providing much better quality of cloth because I'm using some extra specific type of extra material which will increase either the shine or the durability or the color of that particular product. Now, I cannot go by the scion which is fixed. So either there is no scion or the scion which is fixed is not acceptable to me because I am claiming that I am having some more extra quantity of inputs going into my final product. Now, in such cases, the eligible exporter can apply for this advance authorization under this scheme on the basis of self-declaration or self-ratification. RA is the regional authority. Regional authority is that body who is the person who is doing all this procedural part. So whatever applications you are making to DGFT, it is actually going to the regional authority because DGFT is sitting in Delhi. So they have appointed the regional authorities everywhere. So everywhere you need not go to Delhi. You will come to your regional authority, which may be somewhere in your state, generally in the capital or the major cities of the state, and there you can make application and get all these things done. So the regional authority in your state may issue advance authorization, and such cases need not be referred to the norms committee for ratification of norms. So on this self-declaration or self-ratification basis also, you may be given advance authorization. See, today anyways, even if you take advance authorization, there is no big benefit because tomorrow you will have to prove me that you have used that much quantity in your export. And if you fail to do that, then all types of interest penalties, everything will follow. Even the credibility or the rating which I had given you earlier will come down. So you'll lose the other benefits in customs. So no exporter will try to take any undue advantage of this. A rational exporter at least will not do that. Now, further details of the scheme are eligibility to opt for the scheme. Now, an exporter, manufacturer, or a merchant manufacturer, as we saw, both are eligible, who holds AEO certificate. We already saw this today again in revision. Under the common accreditation programs, one, he is eligible. Two, a status holder. We again saw this. There are 1, 2, 3, 4, 5 star statuses given. So a status holder who is a manufacturer plus he is the actual user and he holds valid 2-star or above status. And he has already been submitted its application for grant of AEO. So maybe today he is not AEO, which is the first requirement, but he is a status holder and he has already applied for becoming AEO on the CBIC's AEO portal. He is also eligible to apply for this scheme. However, DGFT may deny the authorization, that is this license under this scheme, to 2-star and above status holder based on their risk management principles. So they have some parameters. If you are falling in the risky parameter, then despite of you fitting in the above requirement, I may not allow you the advance authorization license. Then I will say, okay, Baba, do one thing. You import, you pay duty, you export, you take drawback. We are not giving you advance authorization. You go and take drawback, you go and take GST refund. We will not give you advance authorization. Maybe you do this for 1 or 2 years, prove us your credibility, then maybe in the third year you come back, I'll give you advance authorization. So that may happen that DGFT may deny or reject the application. Fine, students. Anybody has any questions up to this point, please let me know. Is it clear? Hemant is asking what is NI process. See, but it is not infringing process. See, these are some specialized process which are designed in the customs. So for getting a particular license, you have to go through various types of what I will say. See, like when you want to take insurance policy, you have to go undergo certain type of health checkup. So similarly, Here also, for getting various types of licenses and permissions, you are required to undergo certain testing. So one of this testing is non-infringing, right? Now, students, this is one of the very important pointers which also underwent some amendment very recently, which is the pre-import condition. Now, what is this pre-import condition? I'll explain you. See, before this condition was there, like as I said, this has undergone amendment. So prior to this condition was not there or it was not obligatory. So it was such that you have already exported. So you have already exported, and on the basis of export, you are asking the customs to give you this advance authorization license so that your future imports will get exempted. Now, those future imports which you are going to bring under this advance authorization, that may not be actually used for further exports. But you will say, sir, I've already complied with the export condition earlier because my first export which I made that export without using any advance authorization material because I was not having advance authorization. So I first made the export. Then on that basis, I'm asking you to give me advance authorization so that my future imports, I can claim exempt. Now, this has been now specifically removed. They have clarified that they will not allow this. Now they have specifically said that we will only follow pre-import condition. What is a pre-import condition? Pre-import condition is that first import on the basis of advance authorization license and use that same import for making the export. So it should not happen that the export were made from some other product and now once export is done, now you are taking license for import and importing duty free, which may be used anywhere. No. Now it simply says that whatever benefit you have taken on a particular import, that import itself should be utilized for making the export and that has to be matched and only then the compliance of this license would be done. So this is what is called as a pre-import condition. So see what is given. Imported units are subject to pre-import condition. They should be physically incorporated in the export product. Means the import for which you have taken this benefit, the same import material should form part of export, which you are going to export later on. So first import has to happen under the license and using that import, the export has to happen to comply with the conditions. That is what is meant by the pre-import condition. Then there are some more concepts. The next concept is invalidation letter. So your regional authority, where you will go for all types of queries and all types of clarifications or getting some norm set for you, etc., can issue an invalidation letter. What is this? Where the domestic supplier intends to buy duty-free material for inputs through advance authorization. That is, as I was saying, deemed export. So what is this? So I am the supplier of petroleum products. You are the company who are going to use these products for making your final output, which will be exported. You have the advance authorization license. Instead of you buying it from a foreign supplier, I am ready to supply it to you. Now, how will I supply to you? I will supply to you as deemed export, where I will charge the duty, but I may not recover it from you because I can go and get it refund under the GST law. Now, when I'm doing this, what is the proof I have that I have sold to a person who is having a valid advance authorization license? If you remember when I was explaining this few minutes before, I said that I'll ask you to give me your advance authorization license, which means I will ask you to give me some proof. What is this proof? This proof is this invalidation letter, which this particular company who is having this advance authorization license will take from their regional authority. They will make an application. The regional authority will give them this invalidation letter. And this invalidation letter, they will give it to me, which will be a proof that yes, this company is having a valid advance authorization license. They can buy under this license and I can supply to them, which will become my deemed export and the procedures and the consequences of deemed export will follow. So this is what is the invalidation letter concept. So whenever they want to buy from a domestic supplier under the advance authorization, so there has to be some documentary proof for the domestic supplier. So this particular company who is having this advance authorization will give me the invalidation letter. It is like a permission letter. And who is giving the permission? the permission is given by the regional authority. So I also will have no problem in supplying the goods without charging you the domestic duties, because anyways, this will now become deemed export. I hope this is clear, students. Anybody having any questions or doubts on this of invalidation letter? Then there is a concept called as advance release order. Now, what is this? The regional authority shall issue advance release order if the domestic supplier intends to seek refund of duties which are exempted through deemed export mechanism. So it is the next step of invalidation letter. So wherever I am seeking the refund of these duties, I will require the advance release order, which again will be given by the regional authority after checking that all the compliances have been made as per this particular scheme. Now, what is the validity period of this scheme? So the validity of advance authorization may be in two scenarios. One, validity period of advance authorization will be 12 months from the date of issuing the authorization, which means that imports under this authorization must be made within this period of 12 months. So let us say today you have taken the license is valid for 12 months. You have to make whatever imports during this 12 months period. So you have taken license from me for 1200 tons of import. I'm allowing you to import this 1200 tons without payment of duty. Now you may be importing it in 200, 150, 150 tons lot. Fine. But you have to get all this imported within 12 months. After 12 months, if you import it, I will not give you the duty benefit. So the license has some validity period, and which is obvious. Revalidation for another period of 12 months can be allowed once only. An application for revalidation can be made online. Now, let us say your validity of 1 year is getting over, and for some reason you could not import the entire quantity which you have got approved in the license. Then obviously, as we have extension, so in the similar fashion here also, you can get this license validity extended by following the revalidation procedure. Obviously, the authority, the regional authority has the power to accept or deny this, but obviously they will check the reason for you not being able to make the import within the 12 months. If there is genuine reason, they will allow you to extend for further maximum 12 months more. Then second is validity of advance authorization for supplies under deemed export shall be coterminous with the contracted duration of the project execution or 12 months from the date of issue of advance authorization, whichever is later. In simple words, the second validity is where you are buying this under the deemed export format. In simple words, you are buying it domestically. In that case also, the validity of this deemed export will be coterminous, which will be connected with, or which will be matching with the original period of your advance authorization license. So the original advance authorization license is having a validity left of 10 months. So by default, the deemed export validity will also be then 12 months or 10 months. Or if it is 12 months, then it will be 12 months. So whichever is later. So let us say your entire 12 months validity is pending. So entire 12 months validity will apply even when you are buying something under deemed export. But if right now only 10 months validity is pending, so deemed export wala supply can also be done under this 10 months validity period. Next, some more procedural part relating to this. So next procedural part is advance authorization for annual requirement and the eligibility condition. So advance authorization for annual requirement shall only be issued for items which are notified in SION, and it shall not be available in case of ad hoc norms under the self-declaration or self-authorization scheme where SION does not exist. What it means? See, it may happen that whatever you want to import cannot be imported at one time. It has to be imported in stages because your final product is requiring different parts. Let us say you are making a very high-tech machine, which will be made over a period of time. And as the work of the machine progresses, you will require different types of parts. Now you have got all those parts sanctioned under the advance authorization scheme because you'll require all those parts to make the final machine. Now, obviously, you may not import all the parts at once for various reasons. One, they may be coming from different countries, different parts. Second, since you require the parts after a different period of time, why you'll import everything at the start and block your money and space? So what you do is you place your order as per your requirement of manufacturing. So it may happen that different parts are coming at different points of time. Now, in such a case, when you have taken an annual authorization, which means that You have said that I will be buying all my requirement, I will be importing all my requirement, which is spread over a year. In such a case, this concept of annual authorization or advance authorization comes into picture. Here they have clarified one thing. This type of annual authorization will be allowed only where your product is having a scion. Where you are yourself doing some self-declaration, we will not allow this particular benefit. Further, advance authorization for annual requirements shall also not be available in respect of scion where input is notified. So for certain notified inputs, even though there is scion, annual requirement benefit is not there. Further, exporters having past export performance in at least last 2 financial years shall be entitled for this advance authorization of annual requirement basis. Then entitlement in terms of CIF value of import shall be 300% of the FOB value of physical exports or FOR value of deemed export in preceding financial year of rupees 1 crore, whichever is higher. Now, this is a monetary amount set that if you want to get this annual requirement wala authorization, then your exports in the preceding financial year should be minimum this much, and whatever is your export value, uska 300%, that is 3 times, is the maximum amount of advance authorization license which I will be providing. FOR is better free on rail. So how you have free on board? FOB is when the goods are transported through ship. It is FOB, free on board, that is up to loading on the ship. And where you are sending by road, it is FOR, that is free on rail, because generally when it is road, the road transport for huge quantity of items generally is done by the railways. So it is called as free on rail, that is till the goods are loaded on the railway wagons. See, Ginny, if the final product requires only one imported item, obviously that one imported item need not be purchased in part. In that case, that annual requirement is not required. See, annual requirement is generally where your import has to be spread over a period of time. Hemant, the annual requirement could be for how many years? That depends upon ki what type of machine or something you are making. Let us say you are making something which will go over 5 years, then accordingly you will take that type of requirement. And that is where you have so many restrictions that you have to satisfy minimum this much export in last 2 years. Further, you should be your product should be having a scion, because only then I can rely on you that okay, even if you're doing this for 5 years span, this should be allowed to you. Now, whenever you are using any type of export benefit schemes, there is always this condition of value addition. What is this value addition concept? So you have purchased or imported something of 100. When you are exporting it, it should be more than 100. That is what is value addition. And they have given a minimum value addition. So at least 100 should become, let us say they are saying 20%, it means 100 should be minimum 120. If they are saying 15%, 100 should be minimum 115 or more. That is what is this requirement. Now somebody will say, sir, but anyways, if I'm manufacturing something, why my value of output or my export value will be less than my import value? The answer is because there could be a lot of subsidies which are given to exporters by various state governments or even by central government under varied schemes. Or there may be other production linked incentives, which nowadays post-COVID, the government has brought in PLI schemes. Now, it may happen that because of some other benefits that you are getting, your actual export value becomes less than the import value. So you have actually imported the raw material at 100. So when I'm preparing cost sheet, you can see that the raw material is 100, your wages is 120, your overheads is something. Total is actually coming 400. But let us say, because the government wants to promote exports under varied different schemes, some subsidies, some rebates, some PLI, your 400 has come down to 80. So effectively, you are selling your final product at rupees 80, which is lower than the import cost, which is 100. Now, if this happens, or let us say, even if it is made 100, still, I will not allow you the benefit of advance authorization or any other schemes which you are going to study further, because for every scheme, there is a requirement put of some minimum value addition. Now, what is this minimum value addition? The minimum value addition is different for different schemes. Firstly, how much is the value addition, how it is calculated? It is calculated by this formula, A minus B upon B into 100. Now, what is A? A is the FOB value of your exports. So in short, it is the export value. B, it is the CIF value of the imports or the inputs. So that is why A minus B is your difference. That is value addition. So A is the sale value in simple words of your final product. B is the purchase price of your raw material, which you have bought under the advance authorization scheme. Now, the difference between A and B is your value addition, and that is divided by to find out how much percentage of value addition you have done. So this is basically the formula for percentage. Now, what is the minimum percentage? What is required under advance authorization? It is 15%. In the other scheme, which we are going to study after this, it is 20%. So different schemes may have different percentages. So advance authorization says if your raw material costing is 100, your final product costing should be minimum 115. Then only you will be eligible for getting the benefit. Otherwise, this export that you have made will not be considered for giving you the benefit of advance authorization. Further, again, for different products, the value addition percentage may be kept as less. For example, they have given for petroleum products, it can be less. So that is okay. But the general rule is 15%. Now, imports of mandatory spares. Now, many times, along with the raw material, you also require certain items which will be used as spare parts. So what is given? Spares that are required to be supplied with the export products can be imported duty-free again under the advance authorization up to how much value? 10% of the CIF value of the authorization. So basically, what is the spares? See, raw material, what you have imported, you are going to use in the manufacturing process. You will manufacture it and make it final product. But along with final product, you also have to give spare parts. Like along with mobile, you have to give charger. Along with mobile, you have to give some other thing. Now, those are the spare parts which you may not be manufacturing. Like a mobile company is not manufacturing charger. Charger is manufactured by some other company. Even a mobile company is not even manufacturing the batteries used in the mobile, that is manufactured by some other company, sorry, because the entire manufacturing setup is different of a mobile phone, of a battery, and of a charger. But these have to be compulsorily given along with your final product. Otherwise, nobody is going to buy your final product. Now, in such cases, these exporters or these final product companies, what they do is, let us say I'm a mobile manufacturing company, I'm only manufacturing the mobile, but the charger and batteries, which I have to supply along with my mobile, I simply buy it from the respective supplier and I pack it in the same box and supply it. It means on that I'm not doing any manufacturing, any value addition, technical. I'm simply buying it and keeping it as it is in my packet and supplying it to the final customer. This is where this particular points comes into picture, that it is not necessary that only raw material and consumables can be brought under the scheme duty free. You can even buy the spares under the scheme duty free. But then they have kept the restriction that out of the total import authorization value, maximum 10% can be used for buying the spares. Now, this is again a very important condition. This condition is not there in other scheme, which we are going to discuss after this, but it is a very important condition in your advance authorization scheme. Now, what is this condition? It is called as the actual user condition. If you remember, there was another condition which I said is very important, which has also undergone some amendment and clarification, and that was the pre-import condition. Now here again, this is the second very important condition. It has not gone any amendment as such, but it is very important, which is the actual user condition. What is actual user? Actual user means if I have imported raw material using some advance authorization, which I am importing with a promise that I will use it in my vehicle, and the final product will be exported, then this raw material which I have imported under advance authorization has to compulsorily be used by me in my production. I cannot sell this raw material to any other person. Means whatever raw material I have imported under advance authorization license, I have to use it myself in my production. Even if I'm left with the raw material, nothing doing, I can not sell this in the market. That is what is the meaning of actual user condition. Means this raw material under advance authorization can be imported strictly for my own use. I have to use it in actual, and I cannot sell the raw material in the market. This is what is the actual user condition of advance authorization. So what it says, advance authorization or the material imported under advance authorization is subject to this condition. The same shall not be sold even after completing the export obligation. So even if I have completed the condition of export, that whatever amount of export I was supposed to do, I have used the raw material, made that much export, done. Now I'm still left with the raw material. I still cannot sell the raw material in the market. However, what I can do is the advance authorization holder will have option 1 to dispose of products manufactured out of this duty-free input once export obligation is completed. So I cannot sell this imported material, which is my raw material, in the market, but I can use it to make my final product. Whatever final product export I was required to do, I have done. If after that, after meeting the export requirement, the minimum export requirement, which we are going to study, to what extent you have to do export if you are taking some import benefit of advance authorization, that will study. Once that export requirement is completed, now from the balance raw material, I have to use it myself. That is the actual user condition. I will make my final product. This final product I can sell locally. So that is the option given to me. I cannot sell the raw material locally. Raw material I have to use myself only. That is what is the strict actual user condition in case of advance authorization license. Further, if SENVAT or input tax credit facility on input has been availed for the exported goods, even after completion of export obligation, the goods imported against such advance authorization shall be utilized only in the manufacture of dutiable goods, whether within the same factory or whether within the factory of the supporting manufacturer. So same for domestic goods also. So you have to use the material yourself. That is the simple, straightforward requirement. Now, you have used the material, you are not selling the material. But when you are doing the manufacturing, some part of the material has become waste or scrap. Now the question comes, actual user condition is I cannot sell the raw material. But what about the scrap? So what it says scrap which is arising out of manufacturing process as allowed, that is up to the extent of normal loss, can be disposed of on payment of applicable duty even before fulfillment of export obligation. In simple words, it can be sold. Now this is logical, na? See, you are not allowing me to sell raw material, that can be understood. But whatever raw material is becoming scrap, and that also to the extent allowed means normal loss. So anyways, it is going to become a scrap. Any process will have some scrap. Now you cannot say that this scrap also I cannot sell, because then that will be a burden on me. So I can sell the scrap. There is no problem. Only on the scrap I'll have to pay the duty because I had imported it duty free. So at that time I'll be paying duties, but that is okay. So there is no restriction on selling the scrap arising out of this advance authorization raw material. Now, what if my final product which I'm exporting, I want to give it free of cost to my foreign buyer, whether it is allowed. So it is saying advance authorization is also available where some or all inputs are supplied free of cost to exporter by foreign buyer. In such cases, notional value of free of cost input is added in the CIF value of import and FOB value of export for the purpose of computing the value addition. So what is this point? It may happen that I'm importing the material going to use in export, but this material is imported by me free of cost. Why? Because my foreign buyer to whom I have to export the final product, he himself is sending that raw material. Many times it happens that even we, whatever final product we want to get made, we are giving our own raw material. Like many times when you have some program in your family and some close relatives are coming, close friends groups are coming, so you do not hire a caterer, you keep a Maharaj. Now, what is difference between a caterer and a Maharaj? A caterer will do everything from its side. It will directly give you the final product, that is the food. Maharaj will come to your house and he will ask you to bring all the raw material. So you go and do the shopping, or you tell the Maharaj that what type of raw material, what quality, what brand you want, and he will be exactly bringing the quality brand of your requirement. So this is a simple example where the buyer of the final product is itself supplying the raw material, and obviously it is giving the raw material free of cost because it is wanting only you to do the manufacturing. Now, in such cases, the question is, what will happen in advance authorization? The advance authorization scheme says if your foreign buyer is supplying you the raw material free of cost, anyways, we are also not going to charge tax because you are importing that raw material under advance authorization. But while computing the value addition, we have to consider some value of import in the numerator also and in the denominator also. If you remember the previous slide, A minus B upon B into 100, where B is the raw material cost. So here they are clarifying that we will take a nominal value, some not nominal, sorry, notional. Notional means assume value for this imported material, and that will be considered while finding out the value addition. So this point is mainly relating it with the value addition calculation. So cost of raw material is zero to you because it is supplied free by your foreign buyer. Plus duty anyways we have exempted because you are under advance authorization. So both ways for you everything is zero, but only for the purpose of the value addition formula we will do that particular calculation. I hope this is clear. Now, the export obligation part. Now, we allowed you to import the raw material duty free with a condition that it would be used in export. Great. But I have also put some limitation as to the period within which this export should happen. So there is some export obligation period that by when you should have exported this final output so that you are eligible for this scheme. So export obligation means obligation to export the products covered under the authorization or permission in terms of quantity, value, or both as may be prescribed by the regional or competent authority. Now, what is this period? The export obligation period of advance authorization issued for such items shall be 90 days from the date of clearance of import. So after you have imported the raw material, within 90 days, you should convert it into final product and export it. And no extension in the export obligation shall be allowed. Such import shall be subject to actual user condition, and no transfer of imported raw material for any purpose, including job work, shall be permitted. This we already studied above. Now, admissibility of drawback. The duty drawback, as per the rates which are fixed by the customs, which you study in the Customs Act, is available for duty paid imported or indigenous inputs, which are not covered in this scheme, used in the export products. We already discussed this. Before the scheme, you have another benefit called as duty drawback, where you first pay all the duties and after export, you claim the drawback. Even after this scheme, the duty drawback is available. It will be available for the remaining taxes which are not covered in the advance authorization. So for this purpose, applicant shall indicate clearly details of the duty paid inputs in the application of advance authorization. Then when I'm making advance authorization, I'll say that, okay, sir, I'm taking advance authorization for these taxes or inputs, but I have more inputs on which the other taxes are paid, for which I'm not having advance authorization benefit. Why this has to be specified? So that at the time of export, you can claim the benefit of duty drawback. Otherwise, you will not be allowed duty drawback, because once you are filing the shipping bill, that is the export document, and you are taking advance authorization, that is this export is for meeting my advance authorization requirement, then that export gets out of all other benefits because it is presumed you have already got the duty-free inputs. So there is no need to give you drawback. But there is a possibility that there could be other materials or there could be such other taxes for which advance authorization is not giving you benefit. It means those taxes you have already paid at the time of purchase or import, and you still want that drawback. So you have to mention this in your advance authorization license itself. So when you're taking the license, at that time itself, you have to mention that, okay, along with these inputs, I have more inputs on which there would be some other taxes paid. Now this point is simple. Whenever government or any authority gives you any benefit, it will always require that it is cross-verified in the form of audit, special audit, etc., which will be done by the specific authority through auditing experts. Okay. Himmat is asking, sir, is 90 days enough for all types of manufacturing? Fine, but now see, that is why they have been very rigid. So it indirectly means that you will not take advance authorization for those cases where within 90 days you cannot export. That is the simple corollary of this point. So for that, then you can go by the drawback scheme or the other schemes. You will not get the benefit of the advance authorization if you are not able to make export within 90 days. So that is how this will mean. So that is why you have so many alternate schemes. No? For everything, advance authorization may not be useful. So for them, you go by the other schemes. So we go to the other scheme, which is very similar to advance authorization, which is called as the duty-free import authorization scheme. So again, as the name suggests, again, you are importing this without paying the duty. And again, it is an authorization scheme. It is a type of a license given to you that you can import it without paying duty. Now, in principle, both schemes are same. The logic and ideology is same, but the applicability, the procedural part is different. That is why you are having two schemes. So advance authorization was the first. The second one is duty-free import authorization. Now, provisions applicable to authorize advance authorization are also applicable in this case. As I said, both are in principle same. However, these authorizations shall be issued only for products for which SION, that is input-output norms, have been notified. So if you remember, in advance authorization, even self-declaration, self-ratification was allowed, or you can go to the norms committee and get some norm fixed or ratified for you. But here, all those things are not allowed. This scheme will apply only when you already have a SION. Now, under this, what all duties can be exempt? First, you are exempted from payment of the basic customs duty. Then, drawback as per rate determined and fixed by customs shall be available for other duty paid inputs. So everything is not covered here, only imported items are covered. So for other duty paid inputs, you can get the drawback under this scheme. So this scheme allows you drawback. Now, all are eligible. Duty-free import authorization shall be issued on post-export basis for products for which SION has been notified. Application is to be filed with concerned regional authority before starting the exports. Merchant exporter shall be required to mention name and address of supporting manufacturer of the export products on the export documents, invoices, etc. Now, no DFI for inputs with actual user condition. Now, this is the difference between the advance authorization and this scheme. That is here, the actual user condition is not an obligation. So, no DFA shall be issued for an input which is subject to pre-import condition or where SION prescribes actual user condition or certain other specified inputs with pre-import. So, as we saw, this is a post-export basis benefit. So where the pre-import condition is there, automatically that will go out of this particular scheme. Plus, wherever the actual user condition is there, so for certain items, it is a compulsion that it should be pre-import and it should be actual user. So for those cases, DFIA is out of picture because DFIA does not have these requirements, that is actual user and pre-import. Now, what is the minimum validation over here? If you remember, under advance authorization, it was 15. Here it is 20. Now, most interestingly, whether you can transfer the DFI. Now, if you remember, under actual advance authorization, you were supposed to use it yourself. Here, they are saying that if by chance this authorization, after doing your imports or after you have satisfied your import requirements, still if you have the authorization left, you can sell this license to others so that they can import duty free. So it is like a script where after exportation, I give you some amount of import certificate, that is authorization, that up to this amount of import you can import without paying customs duty. Now you have imported whatever you wanted to import. Now you have no more imports left, but still the value which is allowed to you to be imported duty free, that much value is pending in the license. So the license was for 100 crores. You imported 70 crores and you don't want to import further. So you still have license left for 30 crores. This part license of 30 crores can be sold. Yes, beta. You're right, Ginny. So similar to carbon credits, these are called as import licenses or duty scripts. So these can be sold in the market, but again, it is only for DFI. Now, validity, export shall be completed within 12 months from the date of online filing of application. It is valid for 12 months from the date of issue. Separate DFI shall be issued for each scion. No further revalidation shall be granted. But anyways, 12 months is a big period, so this may be sufficient for us. Now, comparison, compare common provisions applicable where between your advance authorization and the scheme. So, accounting. Scion permits use of either generic inputs or alternative inputs. The name description of inputs used in the authorization must match exactly with the name description endorsed in the shipping bill. At the time of discharge of export obligation or at the time of redemption, regional authorities shall allow only those inputs which have been specifically indicated. So first is whatever inputs you are using, you have to account for those inputs so that we can match it and ensure that you are complying with the scions. Next, the above provision will also be applicable for supplies to SEZ or supplies made under deemed export. In short, the common point is you have to do proper accounting of your inputs. Next, the common point between the two schemes is import exportability of items which are prohibited, restricted, or which are required to be exported only through STE. Again, if you remember, we studied this in our unit 1 also, that for certain items, the FTA may provide, the FTP may provide that these are prohibited. For some, these are allowed, but with some conditions, restriction. And for some, the conditions is that they can be imported, but only through STE, imported or exported. Now, what are the provisions under both these schemes for these items? Firstly, for prohibited items, no import or export of an item shall be allowed either under advance authorization or under DFI if it is prohibited. So that is obvious. Where the foreign trade policy has prohibited something, you cannot import that under these licenses also, because these licenses are not giving you license to import anything. These are only giving you license to import without paying customs duty. So obviously, by default, the rule will be only what is importable can be imported without paying the customs duty. What is not importable cannot be imported under this scheme. Second, where the condition of importing through or exporting through ST is applicable, then items which are reserved for import by ST cannot be imported under the advance authorization. However, those items can be procured from ST against ARO invalidation letter. So again, same point, what we had already mentioned, that for these items, you have to compulsory use the STE route. That is, you yourself cannot import it directly. You have to import it through STE as a mediator. For such items, again, the same rule applies that when you are importing those items, you have to follow the STE route. Advance authorization license or a DFI license does not empower you to import these items directly. You have to import it through them only. Similarly, where items are reserved for export by the STE, that is, you cannot export directly, they can be exported using your advance authorization only after obtaining a no objection certificate. So simply, both things where STE is put as a condition, so you have to compulsorily follow that. That is, the import export has to be routed through STE only. Further common provisions are now for restricted items. So for prohibited items, we saw, since they are prohibited, they cannot be imported even by a person having these licenses. Second, where ST is a condition, again, the people having these licenses have to do it through ST because that is already a condition. Now, import of restricted items shall be allowed under these licenses unless specifically disallowed. So see, if we can observe all these points are all saying the same thing, that where any of these conditions are there, restriction, prohibition, or STE, all will apply even for the advance authorization and DFI schemes. That is, for these schemes, there is no special relaxation. So all these restrictions are applicable. Now, domestic sourcing of inputs. That is, you are buying these inputs domestically. So holder of advance authorization or DFI can procure these inputs from domestic state trading enterprise, EOU, EHTP, etc., instead of import. Such procurement can be against the advance release order or the invalidation letter. That is, it will be a deemed export for the domestic supplier. So in short, whatever items are covered under your advance authorization license, either you can import it or you can buy it through your domestic supplier by first going to your regional authority, taking from them the invalidation letter and also the advance release order, so that the person who is selling you can get the refund of the domestic taxes paid by it, and you can buy it from them, and that will be considered as deemed exports under the foreign trade policy. The validity of this advance release order invalidation letter shall be coterminous with the validity of the authorization. So to whatever value validity authorization is given, for the same value the advance release order and invalidation will be given by the regional authority. Next, currency for realization of export proceeds. Now you have to compulsorily make exports. That is a basic requirement. Now what should be the currency in which you will get the export money? So exports proceeds shall be realizing freely convertible currency or in Indian rupees except where not allowed. Provisions regarding realization and non-realization of export proceeds are already discussed in the provisions relating to import-export, which we did earlier. Re-import of exported goods under these schemes. Now you already exported goods, saying that these goods are exported, these are my final products, and I am doing this for complying with the scheme. Now your exported goods are returned back, maybe because of some deficiency, defect, etc. Now what will happen? The goods which were exported under these schemes may be re-imported in the same or substantially the same form, subject to some specified conditions. Right? So these are some common points relating to both those schemes. Now, as we were mentioning about duty drawback, so this is the next type of benefit where you first pay the duties and taxes and then you get it back from the government after export. So it is like refund of GST, where in case of GST, you first pay GST at the time of purchasing, and after exporting, you get back the GST as your refund. Similarly, for customs duty portion, you first pay the customs duty at the time of import, and after export, that duty is returned back to you, where it is called as your duty drawback. Now, various schemes like advance authorization, DFIA, manufacture under bond, EOU, SEZ are available to obtain inputs without payment. So this we already studied, where you don't pay input taxes. Anyways, there will be no requirement of refund of drawback. However, as we saw, there are many restrictions, conditions. So every product cannot be falling under advance authorization or DFI. So suppliers who are unable to avail any of these schemes, then they will avail the duty drawback. That is, they will first pay the taxes on import or on purchases, and then after export, they get the amount back. So here, custom duty is paid on inputs at the time of import, and then later on, it is returned back to the exporter of finished goods by way of drawback. The duty drawback is granted when the imported material are used in the manufacture of goods, which are then exported, as well as imported goods are re-exported as it is. So either you are using it as raw material, making final product, exporting the final product, or you are simply doing trading by whatever you are importing, the same thing you are exporting. For both, drawback is there. So you have section 74 and 75 drawback under the Customs Act. Then it is important to note that the drawback is only of the customs duty. Now, as I said in the start, before GST, the drawback included the excise also. However, after GST, they have removed the GST portion from the drawback. Why? Because that is now separately allowed as refund under the GST law. So under the drawback, you can only get the customs portion. And that is why I had mentioned at the start when we were discussing this, that the drawbacks rates have been reduced now to cover only the customs portion. The GST portion you can take in the form of refund. Now we come to the next type of scheme, which is not discussed in detail in our module because maybe it may not be relevant for our exams. So whatever is given there, we are discussing that much. Scheme for remission of duties and taxes on exported products. If you remember, what did I mention about this scheme? That there are other taxes also for which either advance authorization is not allowed and which are not covered even in duty drawback. See, duty drawback is only covering import. GST refund is only covering GST, but you are paying some local taxes, or even today, you are paying VAT, excise on certain items like your petroleum products, which are now not covered in these schemes. Now you have purchased these items by paying these local taxes, and these local taxes are not covered in any of the schemes that we have discussed till now. So for giving you back these local taxes and other taxes for which there is no specific scheme till now, you have this third category of scheme, which is called as the RoDTEP in short form. Long form is remission of duties, taxes on exported product. Now, what is the reward? Rebate is granted. So here, instead of using the word refund, they have purposefully used the word rebate. Again, it is the same. It is return back of the duties paid. But just to distinguish it from the refund and the drawback, they have used the word rebate. Rebate would be granted to the eligible exporter at a notified rate, which is generally a percentage of FOB value. Why? Because see, as I said, what it is covering the local taxes, and it is covering the taxes on such items like petroleum products, etc., on which you are paying old taxes. Now, since it is not identifiable input in your output, because all these are consumables, so you cannot identify how much of this is going into your final product. That is why they are simply saying we will fix a percentage, 1%, 2%, 3%, and whatever is your export value, you multiply it by this percentage, that much amount is the rebate that you'll get. So a percentage of FOB value with a value cap, that is up to some limit, that beyond this will not give you the refund, of the eligible exported products wherever required on export item. So this is what is the drawback scheme about, or the rebate scheme about. However, for certain export items, a fixed quantum of rebate per unit may also be notified. So it may be percentage, or it may be given as a per unit amount. Sale proceeds, the rebate would not be dependent on the realization of the export proceeds. Now, as you know, for other schemes, this is generally a precondition that your export amount should have been recovered in convertible foreign exchange. For this scheme, that requirement is not there. However, rebate will be deemed never to have been allowed in case of non-receipt of sale proceed within the time allowed under FEM. So we have not linked this scheme with the export recovery. However, in case the export recovery does not happen within the time specified by FEMA, then there could be a problem. So in short, ultimately, you have to ensure that there is recovery of export, but we are not keeping this as our main condition. Further, the remission of duties and taxes under this scheme, that is RoDTEP, aims to refund what? Such duties, taxes on exported as are otherwise not being refunded under the other provisions. So as I just said, you have some local taxes, you have some cess, which is not covered in your other schemes of advance authorization or duty drawback. So for those taxes, like many state governments have their independent taxes because they are having the, like if you know, Schedule 7, which is the schedule of the Constitution which divides the power. In list 2, they give power to the state. Now that is given in entry 53, where they are giving power to the state to levy duty on electricity. Now, in some states, they are levying that tax or cess or duty on the electricity. Now, where that particular fee or cess is levied by the state government, that is nowhere covered in any of your GST refund or your duty drawback. So such things, and as I mentioned, the taxes on petroleum products, because every industry is using these petroleum products. For some industry, their machines are running on the diesel, that is the fuel they are using is these petroleum products. So they get this refund of the taxes paid on these items through the RoDTEP. So objective of the scheme is to refund what? Which is not currently getting refunded. So it is refunding the duties, taxes, which may be central, state, local, borne by the exported products, including prior stage cumulative indirect tax on goods services used in production of the export products, and such indirect taxes in respect of distribution of the export products. So it is a very comprehensive scheme. While determining the percentage of rebate, it will take into account what are the taxes which are going into your final product at even the earlier stages. So not necessarily what you are doing. Maybe what raw material you are getting, it was also processed earlier, it is coming from some other product earlier. So they are trying to cover all the stages because finally you are exporting. So ultimately, every type of taxes for which no refund is there is embedded in the price of your final product. So they will cover the local and central and state taxes at all stages of production and even distribution. And taking into account this, they will fix your rebate rate under this scheme. Now, salient features. What are the features of this scheme? Rebate amount is issued in the form of transferable duty credit scripts. So again, here also you are given scripts which you want to encash, you encash, or you can transfer it, which will be maintained in an electronic ledger by the CBIC. So these are credited to your ledger. So over there, you can see the scripts, the value of the scripts. And if you want, you can sell it to others if you are not utilizing it yourself. Such duty credit shall be used only to pay basic custom duty. So how you can get the benefit of this? You don't get the money of this. They are giving you credit in the form of an entry in your ledger account. And whenever you are making some future imports, to means to the extent of the customs duty which you have to pay on those future imports, you can utilize this credit. So this credit will go to reduce your future import duty cost. Further, the rebate under the scheme shall not be applicable in respect of duties and taxes which are already exempted or remitted or credited, obviously. So for which you're already getting the benefit, I will not give you this benefit. And most important, these scripts are freely transferable. So either you can import it using these scripts. If you don't want, because you are not importing anything, you can sell the scripts to others. The other importers can use this script. So in any case, you get the benefit directly or indirectly of this particular scheme and scripts. Further, ineligible supplies or items under this. So these are certain items for which this scheme is not applicable. First, export of those imported goods in same or substantially the same form. So where you're only doing trading, you're not doing manufacturing, you don't get this scheme. Exports through transshipment, meaning thereby exports that are originating in a third country and they are transshipped through India. It means you are buying from a Bangladesh, selling to Europe. You are only doing the mediator part. It means you have not done any value addition yourself, so you won't get on those exports. Exports products which are subject to minimum export price or export duty. So your already government is levying export duties. It means it does not want to give benefit to that export. So we will not give the RoDTEP benefit also. Products which are restricted, prohibited for exports, deemed exports. So under deemed export, you get benefit of customs duty under the advance authorization, but you will not get the benefit of RoDTEP. Supplies of products manufactured by DTA units to SEZ. See again, in normal case, when DTA is selling to SEZ, you get all other duty benefits, but not of RoDTEP. Products manufactured partly or wholly in warehouse under Section 65. Products manufactured or exported availing the benefit of these notifications. Export for which electronic document in IceGate EDI has not been generated. And last, goods which have been taken into use after manufacture. So if you see mainly what feeling we get from all these pointers is that this scheme is very restricted and it wants to give benefit only in case of a manufacturer exporter who is actually finally exporting. If for some reason there is no actual export, no final export, you will not get the benefit of this RoDTEP scheme. I hope this is clear to all. Great. Okay. Now the next very important scheme is the EPCG scheme. Okay. Okay, Hemant, you want to take break now? Actually, I was thinking of taking break after this EPCG scheme. Is it okay if I complete the EPCG first and then take a break? I know, see, the schemes are very technical, but there's some link. That is why I want to complete those in link, and then we'll take a break where we'll go to other schemes which are not similar. So EPCG, it is again on similar lines like advance authorization. So what was advance authorization? You are importing without paying the customs duty, and then you have to comply with the only condition that you will actually use this imported material in making your export products and export it within the time limit. Now, logic is similar, but this scheme is different in a sense that, as you can see, this scheme is for importing capital goods without paying the duties. So what is common is here also you are importing without paying duties, but here what you are importing is a capital item. So let us say I'm purchasing a machinery. This machinery will be used by me in my factory for manufacturing product. Now, you cannot say that my machine should be exclusively used in manufacturing only the product which will be exported. Like what was the condition in case of advance authorization, that imported material should be used only for making export. Such a condition cannot be put because a machine can be used for so many things. Now, that is why here in this particular case, you are allowed to import your capital goods, that is the machinery, without paying the import duties. Again, you are allowed to purchase it from the domestic supplier under your EPCG license by the deemed export mechanism. So both things, either you purchase from outsider, then at the time of import, don't pay the duty. You purchase domestically, again by giving the invalidation letter, you can get it domestically also without paying the domestic taxes. And then they have given you a multiplier. Multiplier means, let us say you got the benefit at the time of import or from domestic purchase of rupees 100 crores, because that much duty you saved under the scheme, because that much was the duty on your machinery which you did not pay. They have a multiplier, let us say 6 times. So 100 crores into 6 times becomes 600 crores. Now they will give you a period, let us say 5 years, 6 years, 10 years. Within that period, you have to ensure that your exports would be completing this limit of 600 crores. So they are not linking your machine with your entire exports, because which is not practically possible, because machinery is a capital asset which can be used for so many things. Hence, first part is common with advance authorization DFIA, that you can import without paying the tax, or you can buy locally without paying the tax using the deemed export route. But the second part is different, where you have to ensure that within the given period, you have to complete your export obligation. And how that export obligation is computed? Whatever duty you saved at the time of import or domestic purchase, multiplied by a multiplier factor 6, let us say. So 100 crores duty was saved because that much duty you should have paid on import, but that was given exemption under this scheme. So now multiplied by 6. So you have to complete export value of 600 crores within the specified period. This is what is broadly this scheme. So objective is to facilitate import of capital goods for producing quality goods and services and enhance India's manufacturing competitiveness. EPCG permits exporters to import capital goods, again with exception of certain items, for pre-production, production, post-production at zero custom duty. So you can import these machines without paying custom duty, or purchase them indigenously, that is within India, without paying duty in the prescribed manner, and the prescribed manner is the deemed export procedure. In return, exporter will be under an obligation to fulfill the export obligations. Now, who all can get this scheme? Manufacturer, exporter, with or without supporting manufacturers. So either you are yourself the manufacturer, or you are using the help of some other manufacturers who are supporting. Merchant exporters also can use the scheme, who are tied to manufacturer exporters. In this merchant exporter, mainly the STE will come, where the export through them is compulsory. Service providers, interestingly, so professionals can also be included, including service providers designated as common service provider subject to prescribed conditions. Now, What assets are eligible under the scheme which can be purchased without paying the duties? Capital goods, including capital goods in CKD, SKD form. CKD is complete knockdown, SKD is semi knockdown. So many times the machines that are imported may not come in the ready condition. Practically, big machines cannot come in ready conditions because of the transportation and carrying problem. So they are made small parts. Like when a cycle manufacturing company sends the cycle to the cycle shop, the cycle is never sent in a complete state. It is sent as parts. The tires are sent separate, the chassis is sent separate, and then the cycle shop owner will start fitting the parts and making the complete cycle. So similarly, cycle is a very small example. All the big machines, whether purchased domestically or imported, especially in import because it has to travel through sea and do lot of loading, unloading, maybe firstly by road, then by sea. It has to follow various stages. So many times the machines that are imported always come in the CKD, SKD form, right? What else? Computer system softwares which are part of capital goods, spares, molds, dies, tools which are required or which are again used for the capital goods, and catalyst for initial charge plus one subsequent charge. So we all know catalyst means those which support the particular process. So these are different types of capital goods which can be imported under this scheme without paying the relevant taxes. Now, if you remember advance authorization, what were the duties which were eligible for exemption under advance authorization? All custom duties plus the GST, that is the IGST and compensation cess. Now, what is there under EPCG? Under EPCG, capital goods imported for physical exports are also exempt from the IGST. So the IGST and the cess is again exempted over here, same like your advance authorization. Further, in case IGST and compensation cess are paid in cash on import, so there is an option that you can pay the GST portion. Incidence of the said IGST and cess would not be taken for computation of the net duty saved. So obviously your export obligation will be reduced. So what you can say is, no, I'll pay the GST portion. Only I want the benefit of the customs portion. So obviously you have saved less duty because you have not considered the IGST. So that will not be considered while counting your export obligation. Now, what are the restrictions on import export? Import of items which are restricted from import shall also be permitted under EPCG only after requisite approval. So if something is restricted, again for EPCG, it will be restricted. That is, you can import it, but again by taking the specific approval because it is restricted. Similarly, if goods exported, if goods proposed to be exported under EPCG authorization are restricted for export, again the authorization shall be issued. So in short, whatever restriction applies in normal case will apply even after you are taking this particular scheme. Now, actual user condition. Imported capital goods shall be subject to actual user condition, but only till export obligation is complete. Now, here, this scheme is different from advance authorization. If you remember advance authorization, despite completing your export obligation, you were supposed to not sell the material outside. But this is not the case with machine. See, machine is a generic thing and machine's life would be much more. Here, export obligation may be for 4, 5, 6 years. After that, what? You will not keep the machine idle. You can use the machine or you can even dispose the machine. So there is no actual user condition after your export obligation is over. Validity. You get the license, that is EPCG. Within 24 months, you have to import the machine or you can revalidate for further period. Where you are buying the machines locally, that is indigenous, and the benefit is to be given to the supplier. Again, the same procedure. The person holding EPCG may source capital goods from domestic supplier. How? By getting the invalidation letter and through the advance release order. So this will be given by the regional authority, which I will get from them and give to my domestic supplier. Such domestic supplier shall be eligible for the deemed export benefits. That is, he will sell the machine to me by charging GST, but that GST he may not recover from me because he is allowed to take refund under the deemed export category. Such domestic sourcing shall be permitted even from the EOU. Now, what is the export obligation? Here, as I said, there is a multiplier given. So export obligation means the obligation to export the products covered by your this scheme in terms of quantity, value, etc. Now, what is this export obligation? It is to be fulfilled in 6 years, and it is 6 times of the duty saved. So both things are six. The multiplier is also six. That is, if you have saved 100 crores of duty, multiply by six. So your export should be of 600 crores, and the period given for making this export is 6 years, which is again extendable with conditions shown. Import procurement under EPCG shall also be subject to average export obligation. Now, this export obligation consists of average export obligations and also specific export obligation. Now, what are these? Specific export obligation is equivalent to 6 times of duty saved on capital goods imported under the scheme to be fulfilled in 6 years. We already studied this. What is average? Under EPCG scheme is the average level of export made by the applicant in the preceding 3 licensing years for the same and similar products. It has to be achieved within the overall EO period. So which means what? That besides the total export of 6 times, which is the specific export condition, we also want that for the 3 years, you have to meet the average export requirement, which means it cannot happen that you will make all the export in the fourth and the fifth and the sixth year. You have to make export evenly. So they have put a condition that you should also meet the average level of export at least for 3 years. So this is what is the meaning of average export obligation. So specific is your total export should meet 6 times the duty. But this total specific is also divided year wise where they have put the average export condition. Now, the average export obligation shall be fulfilled every financial year till the export obligation is completed. So you are given 6 times export obligation. That is the specific obligation, but divided by the 6 years period. So you get the average. So roundabout that much export has to be done every year till your export obligation is completed. Now, export or supplies made over and above the average shall only be considered for fulfillment of your 6 times specific export obligation. So let us say average is coming to rupees 100 crores every year. Every year up to 100 is minimum required. Now you are making 110. That extra 10 will be ignored because we want the average of 100. So once 100 average is done, that is only counted. But yes, this extra 10 will be counted in counting your total obligation of 6 times. But for counting average, in other words, this year's extra average cannot be carried forward to next year. In other words, every year you have to be making that much export. And then they have defined capital goods because this is what is covered in this scheme, which can be imported duty free. It will mean plant, machinery, equipment, accessories, which is required for manufacture, production, directly, indirectly, etc., etc. So the definition of capital goods is very normal, generic, what we find in all cases. Fine. Now, thank you means I have not yet completed. I have completed the common schemes, which are the most important for exams. But there are few more schemes left, which we'll be doing from the module directly. But yes, we have been continuously taking the session. So we'll take a 15 minutes break as usual. And please don't go anywhere. It is not thank you for the session. It is thank you for these important schemes. So we'll meet after 15 minutes and we'll complete the remaining part from our module. Fine, students? Yes, Jenny. So let us take a break for 15 minutes. Now we go to some remaining pointers in this chapter. Now we have been reading these names in virtually every subject, whether it is income tax or GST or customs. Now, what are the special benefits relating to these? That is what we are going to study. EOU, EHTP, STP, and BTP. What are these? EOU, as we all know, is the short form for 100% export-oriented undertaking. STP, EHTP. EHTP is Electronic Hardware Technology Park. STP is Software Technology Park. BTP is Biotechnology Park. Now, units which are undertaking to export their entire production of goods service, except permissible sales in DTA, may be set up under these schemes for manufacturing of the goods, including their repairing, remaking, reconditioning, re-engineering, etc., etc., etc. Trading units are not covered under this scheme because the basic idea is you should be the first person, that is, you should be the originator or manufacturer. Now, to some extent, DTA sales may be allowed, but otherwise, majorly, you have to export your final product. That is what is the basic idea of these schemes. Now, what is the purpose of these schemes? The purpose is to promote export, enhance the foreign exchange earning, attract investment for export production and employment generation. Now, somebody will say, sir, what are these schemes? So basically, government has identified certain areas which will be earmarked as SEZ. Now we all know SEZ. Now the purpose of SEZ is again export promotion, but besides that, even development of a particular area which may be very backward or which may not have otherwise infrastructure facility. So by setting up SEZ, that entire area which is now earmarked as SEZ gets the connectivity with major ports, airports, and highways. So even there is an overall development of that area. That is what is the purpose of earmarking an area as SEZ, besides the export benefits. Now, what is the purpose of earmarking these? If you see, these are specific units which are given the special status. So here there is no specified area. These are not areas. These are specified units. So I may be an independent factory in a normal industrial area. I may get myself this approval or this accreditation of becoming EOU. And once I get this accreditation of EOU, then I will be called as a EOU unit or a EHTP, STP or a BTP unit. Now, what is the advantage? The advantage is, as I apply for these special accreditations, I indirectly give sort of approval that yes, I will be exporting my major output. Second, I give a type of a confirmation that I will be involved only in manufacturing of those specified goods and services for which these schemes are identified. Now, my benefit is I am given a special treatment when it comes to taxation. What are those special treatments that we'll understand over here? But in general, I get the benefit of acquiring goods without paying taxes. I get the benefit when I'm selling these goods because anyways, my majority sales are exports. So overall, I am given a very special treatment in all taxes in the form of various types of duty concessions, remissions, rebate, etc. Now, what are these? Let us understand. So EOU, ESTP, STP units may export all kinds of goods and services, except items that are prohibited. So for them, they may be exporting everything except the items which are specifically prohibited. Now, EOU, EHTP, STP may import or procure either from DTA or from the bonded warehouses of customs or international exhibitions held in India. So it is not necessarily that they have to compulsorily import only. So either they may import or get from DTA, which will again become as good as deemed exports, or from goods which are kept in the bonded warehouses, or where any international exhibitions are held in India, all types of goods required for their processes without paying the basic customs duty, additional custom duty under Section 3 IGST compensation cess. So they enjoy similar benefits like EPCG, advance authorization, to the extent that they also can import without making payment of these taxes. However, procurement of goods covered under GST from the DTA would be on payment of applicable GST and compensation cess. So when they are purchasing goods locally from the DTA, that is not importing, then they will be liable or they will have to pay the GST on these goods. But when they are importing these goods, then whatever is the IGST and compensation cess, that they need not pay. So that is one small difference, that when they are purchasing domestically, they have to pay the domestic GST, whatever CGST, SGST or IGST. But when they are importing, under import, whatever are the IGST compensation cess leviable, that will be exempted. So that is one small variation in these cases and the earlier scheme that we discussed. Further, units can also import goods, including capital goods required for approved activity on a self-certification basis. So like EPCG, EOU, they don't require a specific license. They can self-certify stating that we are EOU, this is our EOU license, and we are importing it for the purpose of EOU. They can self-certify this and they can get the benefit of import without making payment of duty taxes. Now, goods imported by a unit shall be with the actual user condition and shall be utilized for the export production. So this is common and obvious. When I'm allowing you to import something without paying the import duties and taxes, obviously it has to be with this condition that it will be utilized only for the export. Now, the state trading regime shall not apply to EOU. Now, this is interesting. We have been studying that wherever certain imports or exports are to be done only through STE, that is state trading enterprises, then even under advance authorization or any other DFI schemes, you have to compulsorily follow it through the state trading enterprise regime. However, this does not apply to EOU, except again for some products where you have to follow the ST regime, but otherwise EOU get the special relaxation of directly exporting or importing and not going through the STE regime. Further, supplies by the DTA to whom? To these special units for use in the manufacture are considered as deemed export. So when a DTA unit is supplying to you under your advance authorization license, under your EPCG license, or if you are EOU, EHTP, STP for your manufacture, which you will be exporting again, in all these cases, you are giving me some declaration. Like in advance authorization and EPCG, you are giving me the invalidation letter that you get from your regional authority. Similarly, here also, you have to give me that type of authorization letter so that against your authorization letter, I will be selling you these goods without charging the taxes. Actually, I charge the tax, but I take it, refund myself. That is why I do not pass on the burden on you. There is another option in deemed exports that I may charge the tax, recover from you, and you can immediately get it refunded. So that is a choice given in GST whenever it is deemed export. Generally, the supplier does the refund himself because he does not want to put the duty burden on these buyers. Otherwise, they will, instead of buying from the domestic supplier, they can import because over there, they are getting zero duty impact. So generally the DTA supplier will himself go in for the refund process. But the point is that these entities are also put in the deemed export category where when a domestic supplier is supplying to them against the authorization which they will give to the domestic supplier that they will be using these goods in their final output which will be exported, then the domestic supplier will not recover the tax from them. It will charge the tax on the supplier, pay the tax to the government and take it refund itself. This is what is the practical practice followed. Now, the DTA supplier shall be eligible for relevant entitlement under the deemed export provisions of FTP besides discharge of export obligation, if any, on the supplier. The refund of GST paid on such supplies from the DTA to EOU would be available to the supplier subject to the specific conditions and documentation. So this is obvious. So whatever are the relevant conditions, they will apply even over here. Now, other entitlements. Now, what are the other benefits? Exemption from industrial licensing for manufacturers of items which are reserved for MSME. Now, as we all know that MSME is a very upcoming concept. Now, in this particular case, MSME has certain items reserved for them, that is, which can be made only by MSME. However, these EOU, EHTP, STP are entitled to even manufacture those, and they are exempt from getting the license. That is, they need not apply for the license for this. Further, export proceeds will have to be realized within 9 months. Units will be allowed to retain 100% of export earnings in the EEFC, that is the Exchange Earners Foreign Currency Account, and units will not be required to furnish bank guarantee at the time of import or going for job work in DTA, subject to fulfillment of some other conditions. Most important, 100% FDI investment is permitted through the automatic route, which is similar to that in case of SEZ. So besides the duty benefits, these are other relaxations or benefits that these special units enjoy. So obviously that helps them grow their business, do their business in a more lucrative manner. Next, what is the requirement relating to earning foreign exchange? So it says that these units should have a positive net foreign exchange. So there is no minimum requirement that you should have minimum this much, but at least they should have a net positive foreign exchange. Moreover, certain sector specific provisions have also been laid down where a higher value addition and other conditions are given. So for some, there may be a requirement of minimum value addition like profit. Otherwise, the only requirement is you should have a positive NFE. NFE is net foreign exchange earnings. Now, this NFE shall be calculated cumulatively in block of 5 years. So it may happen that the initial years there is a loss, which is obvious in any new business. So you are required to achieve this positive NFE at least in a block of 5 years. So maybe 1-2 years it is negative, or maybe let us say like in COVID, in between there was negative. So it is business cycle. It may happen that not necessarily only at the start of the business, anytime even in between during some year there may be negative, that is there may be loss, it is okay. That is why they will be counting your NFE, which has to be positive, in a block of 5 years period. So they will give you a block of 5 years, and in those 5 years, your overall NFE should be positive, and that will be sufficient satisfaction of the condition of EOU, EHTP, STP authorization. Further, applications, approvals, letter of permission, letter of intent, and undertaking. Now, application for setting up EOU. Now, if you want to become EOU, etc., you have to make an application. And the application is again made to respective authorities. They scrutinize your application. They seek respective documents, information, and on that basis, they give you the final approval that you are EOU. So, application for setting up EOU shall be considered by Unit Approval Committee or Board of Approval as the case may be. So, like how you have DGFT for the other matters, you have Regional Authority for Advanced Authorization, EPCG. So, for EOU approvals, you have the Unit Approval Committee or the Board of Approval. Now, what is the investment criteria put? Only projects which are having a minimum investment of 1 CR in plant machinery can be considered eligible for becoming EOU. However, this will not apply for units in EHTP, STP because these are service units. So for them, maybe that much investment in plant and machinery is not required. For example, electronic hardware technology park, software technology park, they only require systems. They don't require anything else. So that is why for them, this 1 crore minimum requirement is not applicable. And further, EOUs which are engaged in handicrafts or agriculture or these items, again for them, the requirement of 1 crore is relaxed. Now, the BOA may allow establishments of EOU even with a lower investment criteria. So for these sectors which are noted or mentioned over here, the requirement of 1 crore can be reduced. Inter-unit transfer, that is transfer from one unit to another, which is falling in the same category. So it may be between two EOU or between EOU, EHTP, etc. Now, why this is important? Because if you remember at the start, we read in this category that basically these are formed for exports. One, they are allowed to make some domestic transfers, which is transfer to DTA, but that is limited with some capping. Now the question is, if they make transfer to each other, how will this be looked at? Whether they will be counted as exports, they will be considered as DTA, or they will be completely ignored from the calculation. That is what is this point. So transfer of manufactured goods, capital goods from one EOU, EHTP, STP to another is allowed on payment of applicable GST, because anyways this is not export, with prior intimation to the concerned development commissioner of the transferor, transferee, as well as concerned custom authorities as per the specified procedures. So you can do such transfers, internal transfers from one unit to another, but 2 points. One, you have to pay GST because these are domestic sales, these are not real export sales. Two, these have to be done with prior intimation and following strict procedures. Goods supplied by one unit to another shall be treated as import for the other units for making payment of duty on DTA sale by the second units. So when they are transferring to one another for the recipient unit, it will be considered as import. Now comes the exit. Now let us say you have worked as DTA, as EOU, ESTP for 5 years, 7 years, 10 years. Now you want to become a normal unit. What is normal unit? See, your unit remains there. Only you do not want this certification. Why? Because this is coming with so many restrictions and conditions. Let us say now you do not want to make so much of export. So you want to operate as a normal DTA unit. Now in this, you can exit from the scheme. How? Again, with approval of your designated authority of the respective EOU, EHTP, etc., the unit may opt out of the scheme. Such exit shall be subject to payment of applicable excise, customs, and on payment of applicable GST cess, if any. Now you'll say payment on what? Payment on all those materials, capital goods, which you had originally purchased without paying these taxes. As we studied above, that when you are EOU, EHTP, STP, you can procure these items, import or domestic, without paying certain taxes. On domestic, yes, GST was applicable, but on import, all the duties were exempted. Now, once you convert to DTA, if any of these items are lying in stock, which may be stock of material or stock of capital goods, on that, you have to compute and pay the applicable taxes. If unit has not achieved obligation, it shall also be liable for penalty. Now, we had given you obligation of achieving net foreign exchange earnings. We have also given you obligation of achieving some minimum exports. If any of these obligations are not satisfied at the time of export, you are also liable for penalty. Now, conversion. Existing DTA units may also apply for becoming EOU. Now, above point was EOU exiting, becoming DTA. Now this point is existing DTA. So you are operating as DTA. Now you want the EOU status. Again, you have to make application to the respective authority or converging or maybe merging to other EOU, vice versa. In such cases, units will avail exemption in duties and taxes as applicable once you are converted. Now comes the next very interesting common category, that is deemed exports. But I'm sure by now you understand what is deemed exports. So deemed exports are basically local transactions between two local businesses. The only difference is one of the business who is the buyer is either having advance authorization or is having EPCG license or is EOU, EHTP, STP, BTP. Now, when any of these persons are buying goods from another local supplier, let us say I am the supplier and you are one of these units. In such a case, you have the option of one, buying the goods normally from me without showing me that you are having this special benefit. In that case, I will charge the tax normally. I will recover it from you. I'll pay to the government. Nothing doing because you are not getting or going for any special benefits. Second option, you will inform me that you are having EPCG license under which you want to buy the machine from me. you are having advance authorization under which you want to buy the raw material from me, or you are EOU, EHTP, HTP, and whatever you are buying from me, you want to use it for your exports. In such a case, as we read in advance authorization EPCG, you will give me the invalidation letter. For the advance release order. Similarly, in case of these specified units, here also you will give me the declaration. Against these documents, I will be selling you these goods, which may be raw material or capital goods, and I will also be charging GST. Now, most important point, many times students and professionals confuse that since the word deemed export is used, they say, sir, should we charge IGST? Answer is not necessary, because I repeat, these are domestic supplies. So the tax treatment is like domestic supply. If both are in the same state, it will be C plus S. If they are in different states, it will be I. So only the name is deemed export. It has no relevance with export or the provisions of export like under LUT, with payment, without payment. All those provisions are not applicable. The only thing is that as a supplier, when I will be supplying you these materials or capital goods under any of these schemes, I will be charging GST normally, C plus S or I, as the case may be. The only thing is that this will be immediately refunded. So once I file my GSTR1 return, 3B return, and show these deemed exports in that under the respective table and pay the tax, immediately after that, I can apply, or you can apply. Anyone can apply, either the supplier or any of these units which are the buyer can apply for the refund. So it is as good as a tax-free transaction for them. However, since that is a local transaction, the government did not want it to disturb the local flow. So they said, first duty you pay, then you take back the duty as a refund also immediately. So here you file 3B, immediately you make application for refund. So this is covered under GST by way of a notification which is issued under section 147 of the CGST SGST Act on the recommendation of the Council. The benefits of GST and condition applicable for such benefits would be as specified by the Council. Now, who all are covered? So we restrict our discussions to deemed export for the purpose of FTP in this chapter. Why? Because relating to GST, you'll study in the GST module. So no need to cover that. But I just explain them in brief so that you get an idea. Now, under FTP, what is given under deemed exports? Deemed export broadly cover 3 areas. Supplies to domestic entities who can import their requirement duty-free. Supplies to projects or purposes that involve international competitive bidding, and supplies to infrastructure projects of national importance. So these 3 are deemed exports from the perspective of FTP. This is what is covered even in GST, where you are supplying to those entities like we saw the names above, who are having either those status of EOU, STP, STP, or who are buying under their respective license. These 2 are something not covered in GST, that is supplies to projects which are involving international competitive bidding or which are of national importance. Now, categories. First, supply by manufacturer and supply by main or subcontractor. Supply of goods against advance authorization or DFI. Second, supply of goods to units which are in EOU, STP, EHTP, etc. And third, supply of capital goods against the EPCG authorization. So these are the ones which are covered in the GST law also as deemed exports. Now, supply by main or subcontractors. Now, this is the second and the third part, which is not there in the GST. Supply of goods to project or turnkey contracts financed by multilateral or bilateral agencies funded, notified by Department of Economic Affairs under international competitive bidding. Supply of goods to any project or for any purpose where import is permitted at zero basic custom duty under international competitive bidding. Supply of goods to mega power projects, supply of goods to UN or international organization for their official use, and supply of goods to nuclear projects through international or national competitive bidding. These are the actual cases covered in deemed exports under FTA. Now, what is the benefit? Deemed exports shall be eligible for all or any of the following benefits in respect of manufacture and supply, which are coming under the deemed export definition. First, advance authorization for annual requirement, deemed export drawback, refund of drawback on the inputs and units used in manufacturing supply under the deemed export can be claimed on all industry rate of duty drawback, scheduled provided on Senvat paid, etc., under branded, etc. Refund of terminal excise duty for specified excisable goods. So basically, these are the benefits that you can claim. One, you can buy without paying tax under advance authorization, or whatever taxes you have paid can be taken back as drawback using the drawback rates, or if there is any terminal excise duty which was there under the old law, that is also refundable. Now, what are the common conditions for deemed export benefits? First, supplier shall make directly to entities listed above. So I will have to supply them directly. I cannot route it through some intermediate party. In all cases, supply shall be made directly to these designated projects. So one, either to the parties or directly to the projects. Similarly, EPCG license holder, subcontractors may, however, make supplies to main contractor instead of supplying directly to the designated projects, and payment in such cases shall be made to the subcontractor by the main contractor. So only for contractor, main contractor supplying is also assumed to be supplying by the subcontractor. So subcontractor is giving service to main contractor giving to these units or to these projects will be considered as deemed export. Supply of domestically manufactured goods by an Indian subcontractor to any Indian or foreign main contractor directly designated project agency site shall also be deemed exports. So these are the various pointers which are covered as deemed exports. So this is the end of this entire chapter, students. So let us have a quick recap of whatever we have studied in toto. So firstly, we are talking about the foreign trade policy. So foreign trade policy is having three things. First, the policy document. Second, the handbook of procedure. And third is the classification. Now, what are the different export promotion schemes? One, you have the duty exemption schemes where you can import or purchase without paying the duty on the input side. So it is advance authorization or DFI. Second, you pay the duty and claim it back. That is what is the drawback scheme, which is under the duty remission. Then scheme for remission of duties and taxes on export. Here the RoDTEP or RoSTCL is covered. Then purchasing capital goods without making payment of duty. It is EPCG. Or you are becoming these special entities by registering yourself under the respective category and satisfying the conditions, or you are a domestic supplier supplying to all these entities, which becomes deemed export. So these are the different types of export schemes under the FTP. Now, advance authorization compared with the DFI, if you remember, both are similar with small differences. In both cases, you can import without paying the customs duty. Now, duty-free imports of inputs used in export. In return, exporter needs to fulfill the export obligation. Similar to AA, duty-free imports of inputs in return of export obligation. Differences are this is not transferable, this is transferable. Here there is actual user condition, there is no actual user condition. Here the minimum value addition is 15, here it is 20. Fine. Now, EPCG, EOU, EHTP, STP and deemed exports. So EPCG is what? Exporter can import the capital goods or even purchase them locally and maybe without paying the applicable duties. The only difference is locally the GST is applicable. It is paid also, but it can be immediately refunded. So it is as good as they are saying without payment. In return, the exporter has to fulfill the export obligation. How much it is? It is 6 times the duty saved within 6 years. Then under these units, the exporters can import or procure locally capital goods and inputs without making payment of duty. Second, in return, they have to make export of their entire production. However, some portion of domestic sales is allowed. Most important, these units cannot be doing trading. So they have to be manufacturer or original service providers. Deemed exports, goods are manufactured in India by domestic manufacturers and supplied either to these EOU, EHTP, etc. or under the specified projects. Goods are not going out of the country. That is why they are not real exports. That is why they are called as deemed. And payment is received generally in Indian rupees only. At times maybe in forex, but generally it is Indian rupees only because you are buying from the domestic persons. Fine. Let us take some questions. Mr. Ayush Bhandari wants to import samples. I think if you remember, we studied all these in detail in the previous lecture when we were discussing Unit 1, where there were specific import-export procedures given for prototypes, for samples, etc. Salient features of advance authorization. Mr. X is desirous to know the benefit of deemed export under FTP. You are required to discuss the same with reference to FTP. So basically, you have to list down what are the various benefits of becoming or getting classified as deemed export. Discuss the similarities between AA and DFI. Discuss the privileges which are granted under FTP to the status holder. Who are the status holder? 1 star, 2 star, 3 star. They are the status holder. And we studied the advantages in the previous session. With reference to the provisions of FTP, discuss giving reasons whether following statements are true or false. First, if any doubt arises in respect of interpretation of any provisions of FTP, the said doubt should be forwarded to CBIC, whose decision thereon would be final and binding. Just give me a minute. There is somebody on the door. I'll just check. So what is the point? We have to say whether this is true or false. So with reference to the provisions of foreign trade policy, you have to discuss what? If there is any doubt in respect of interpretation of any provisions of FTP, the said doubt should be forwarded to CBIC. Is it true? Answer is no. See, the regulatory authority under FTP is the DGFT. So whenever there is any doubt or there is any clarification required, you go to the DGFT and not any other authority. Yes, CBIC, state GST authorities, RBI, they are also equally part of the administrative part, but they do not have the say in FTP matters. The final say is of the DGFT and the relevant regional authorities nominated by the DGFT. Now, EIC is a unit 12-digit PAN-based alphanumeric code allotted to the persons of undertaking. What is the answer for this? Yes, correct. Again, we studied this. It is a 10-digit PAN-based number. In fact, it is your PAN number only. It is not a different number. The same PAN number is also your IEC code. The only thing is you have to get it registered with customs, so it becomes your IEC code. So your PAN number is there. Like you and me are also having PAN number. But if I go to the customs portal, which is the IceGate portal, if I put my PAN number, I am not shown as an importer exporter. So you also have a PAN number and I also have a PAN number, and people who are registered over here are also having their PAN number. But your and my PAN number will not be appearing on the IceGate portal, which is the customs portal, because we have not registered ourselves over there. But once we get registered over there, we are given the same PAN number only as our IEC, that is the importer exporter code. They are not having a separate digit just for convenience, and it is logical also. Why to unnecessarily have multiple numbers? Anyway, any new number they would have taken, it would have been PAN based only, like your GSTI. So decided not to change the number, but it has to be validated by registering yourself on the portal. So until and unless you are registered, that number will have no relevance. Now, two exporters, namely Red Sky and Black Knight, have achieved the status of status holder, 1-star export house. In the current financial year, both have been regularly exporting goods other than gems jewelry every year. What would have been the minimum export performance of the two exporters to achieve? So if you remember, again, we studied that for each category, some minimum export obligation is required. Only if you satisfy or achieve that, you are given that status. Now, further, what is said? Both the exporter wants to establish export houses in accordance with the applicable guidelines. What should be their turnover to enable them to establish export warehouses? So again, there are specific turnover limits given. You can definitely check from the PPT that I had already shared. Now, fintechs manufacture goods by using imported inputs and supplies the same under the AID program of the United Nations. Fine. The payment for such supplies is received in free foreign exchange. Can fintechs manufacturers seek advance authorization with reference to provisions of FTP for the supplies made by it? Answer is no. Because for advance authorization, there is a very important condition called as pre-import. Now, if you have already exported goods and you want to take the benefit on the basis of exports already made, that is not eligible for advance authorization. Yes, if you are going by the pre-import condition, that is before you have made the export, you are first making the import. And for that import, if you are satisfying all the conditions, you will be eligible for advance authorization. Now, for that, you have to first check whether you are an eligible person. Now, who is eligible? If you remember, you have to be the AEO or you have to be one of the status holders who has applied for AEO. Until unless that happens, you are not eligible for getting this advance authorization. Next, XYZ Limited has imported inputs without payment of duty under advance authorization. The CIF value of the inputs is 10 lakhs. Inputs are processed, final product is exported. Export made by XYZ are subject to general rate of value addition prescribed under advance authorization. What is the general rate? It is 15%. No other input is being used by XYZ in the processing. What should be the minimum FOB value of exports? So it will be 10 lakhs plus 15%. So it will be 11 lakhs 50,000. So this has to be the minimum FOB value of exports. That is by adding the minimum 15% requirement. Had it been DFI, we would have added 20% to find out this amount. A has used some duty paid inputs in their export products. However, for the rest of inputs, he wants to apply for advance authorization. Can he do so? Answer is no. In fact, advance authorization sorry, comes with the actual user condition, and it is a compulsory requirement that whatever materials are purchased under advance authorization have to be used only for export. They cannot be supplied domestically. So for rest of inputs he wants to apply for advance authorization, that will not be allowed. So see, let us go through what they have given the answers for this. So see, these are pure theory questions. False, false. This is already what you mentioned. So, seventh question. Status holders are exporter firms recognized as business leaders, etc., etc. All export of goods, service, technology having IC number shall be eligible. Fine. So nothing very specific. Yes, for this, thus the export performance of Red Sky Black Knight would have to be 3 million USD for the purpose of becoming this particular category of one-star export house. This is what we also studied. So this is what you have to learn and remember. Second, supply of goods to United Nations International Organization for their official use or supplies to project financed by them are deemed export. Advance authorization can be used for supplies made under deemed export. Therefore, the fintech's manufacturer can seek advance authorization. Okay. And then this minimum requirement, which has to be adding 15%. So it comes to 11 lakhs 50,000. Next, last answer. Yes, can do so. In case of part duty free and part duty paid imports, both advance authorization and duty drawback will be applicable. Drawback can be obtained for any duty paid material, whether imported or indigenously used in goods exported as per the drawback rate fixed by the Ministry of Finance. Advance authorization can be used for importing duty free material. Okay. Fine. So that's it. So students, this is the end of the entire foreign trade policy. It was slightly technical, but I'm sure you all would have been able to understand every bit of it. Yes, too many pointers, too many technical things were discussed in one session. So I will request that you all please revise the whole thing from the module so that you'll get each and everything in toto. We have also gone through the questions, so you'll get to know as to what type of questions you can expect in exams. So accordingly, make the preparation, study them from your modules, and let us catch up again in the next lecture for our further deliberation on the subject of indirect tax paper and this particular indirect tax law paper for your CA final exams. So anybody has any questions, we can discuss them before we close our today's session. Hey students, anybody wants to ask something? Anybody wants to discuss anything? No questions, students? Okay. So then let us conclude for today. That is the end of today's session. So thank you all students. Technical team, we can close the session. Thank you. Thank you. Good night.